All right, let's get right back to Bruce Campbell and his top picks. So Bruce, first up here, we have Tidewater Midstream. Why did you choose this company?
Well, everyone's aware this year for sure about how the energy patch is performing, and Tidewater's really in that business. So they are natural gas processing, storage, liquid storage, and they're in BC and Alberta, which is the hub. If you kind of look at where they are versus their peers, they're quite a bit smaller, and because of that, they trade at a discount. But if you look at the growth rate, they've had a growth rate of about 45% over the last 3 years. Their peers are at about 9%. They have a dividend payout ratio that's 16% versus in the 80s for their peers. And from a valuation standpoint, they trade at about 4 times their cash flow versus their peers at about 9 times cash flow. If you layer on the fact that they also own a big position in Tidewater Renewables, which is the natural gas, renewable natural gas side of the business, we think there's a lot of opportunity in that side of the business going down the path in the future. So cheap valuation, the stock's just starting to break out from a technical standpoint, and again, that's one I can throw up on Twitter for people. And so we think that there's lots of runway with higher commodity prices here.
And remind us of that Twitter address again.
It's SC_funds.
SC_funds. Okay, let's get to your next one. I don't know how to pronounce this one, I have to admit. Viemed Healthcare. Did I say it right?
Yeah, good job. Yeah, exactly. Yeah. So Viemed, they're in the non-invasive respiratory devices. And so when we think of respiratory devices, most of us think of, invasive devices that were used in the hospital to help people with COVID. Well, these are actually in-home people. And so Viemed's been growing organically and via acquisition. And the management team's been doing an awesome job. They've just come out with their earnings. This for the second quarter in a row now. They beat the expectations. They're growing phenomenally. Their guidance is for another 25% growth over the next year from a top line perspective. They're profitable. They have a big cash balance. They've been buying back stock. Management owns a fairly significant stake at about 17%. And then from a valuation perspective, they trade at around, call it 4 to 5 times their 2023 projected numbers versus their larger peers at around 14 times. So there's tons of room for this stock to get recognized. It does trade in both Toronto and NASDAQ. So with that NASDAQ listing, you do, when the US investors get and take notice of it, it'll really start to move. And so, we've owned it in the past. We've used it as a top pick in the past. It was sold off quite a bit and now starting to